Welcome to the Dinar Daily. A truly significant development is unfolding in Iraq, one that is capturing the attention of the international financial community. After a long period of quiet preparation and widespread speculation, the Central Bank of Iraq has now officially confirmed a major strategic move, the launch of its digital dinar program. This is not a minor technical update or a rumored plan. It represents Iraq's most definitive step to date toward establishing a fully digital economy. This initiative is a profound transformation, poised to redefine the fundamental mechanics of the Iraqi dinar, alter the flow of capital within the nation, and reshape how global investors and financial institutions perceive Iraq's economic trajectory. This report will break down the components of this launch, the strategic reasoning behind its timing, and the long-term implications it holds for Iraq's financial architecture. It is essential to first clarify what this digital dinar is, and just as importantly, what it is not. This initiative is the creation of a central bank digital currency, or CBDC. This is not a decentralized cryptocurrency, and as the report indicates, it bears no relation to assets like Bitcoin or Ethereum. Instead, this is the official national currency of Iraq. The very same dinar but fundamentally redesigned for the digital era. It will be issued, controlled, and fully backed by the Central Bank of Iraq. This distinction is the cornerstone of the entire project. Unlike private digital assets, the CBDC is a sovereign currency, giving the central bank complete and direct oversight over its circulation. This single change from a physical, paper-based system to a state-controlled digital ledger is the mechanism intended to revolutionize the country's financial landscape. To understand the magnitude of this decision, one must first consider the long-standing structure of Iraq's economy. For decades, the nation has operated as a heavily cash-based society. The vast majority of daily transactions, from small retail purchases to major business deals, have traditionally taken place using physical banknotes, often completely outside of the formal banking system. This reliance on cash, while culturally entrenched, has created persistent and systemic challenges. It fosters an environment where financial tracking is difficult, accountability is limited, and the formal economy is smaller than its potential. This cash-centric model has been identified as a significant hurdle to economic modernization, creating vulnerabilities that the central bank is now directly seeking to address through this new digital framework. The consequences of this heavy, cash reliance are specific and severe. As outlined in the analysis of the situation, a cash-dominant system creates extensive room for financial corruption, as untraceable money flows easily. It also facilitates the widespread use of counterfeit bills, undermining public confidence in the currency itself. Furthermore, the physical bulk of cash makes it a vehicle for currency smuggling across borders, draining capital from the national economy. These issues combined have historically hampered Iraq's ability to maintain a stable and transparent financial environment. The move to a digital dinar is, therefore, a strategic statement of intent, aimed squarely at mitigating these deep-rooted problems by moving transactions onto a traceable, verifiable, and secure platform. The digital dinar is presented as a direct solution to these challenges, with the core objective being oversight and control. By issuing a CBDC, the Central Bank of Iraq will create and manage a central ledger. This ledger will, in theory, record every digital transaction. This grants the CBI a level of visibility into its own money supply that is simply impossible in a cash-based system. It is a fundamental shift from an opaque financial environment to one characterized by transparency. This control allows the central bank to monitor the flow of funds in real time, implement monetary policy with greater precision, and secure the financial network against the illicit activities that have plagued the paper-based system. This transition is not merely an upgrade. It is a re-architecting of the nation's entire financial foundation. For the average Iraqi citizen, this transformation is framed in terms of immediate, practical benefits, speed, convenience, and safety. The report paints a picture of a future where financial friction is drastically reduced. It imagines a scenario where individuals can send and receive money instantly using only their mobile phones, pay utility bills in seconds without queuing at a bank, and transfer funds to family members across the country without the long processing delays associated with the traditional banking system. Under this new framework, critical payments such as salaries, tax collections, and business-to-business transactions are expected to move with unprecedented speed and security, streamlining the pace of the entire domestic economy. The security enhancements of this digital system are a key pillar of the initiative, because every digital transfer will be logged on the central bank's secure, centralized ledger. The opportunities for fraud are significantly diminished. In the digital realm, fake currency becomes a near impossibility, as each unit of currency is a verifiable digital token issued by the CBI. This feature is designed to directly combat the persistent issue of counterfeit notes. For a nation that has dedicated substantial resources to fighting financial corruption and rebuilding public trust in its institutions, this digital leap represents far more than just modernization. It is being positioned as a foundational element of a new financial revolution, one designed to deliver stability and build confidence from the ground up. The timing of this announcement is not arbitrary. The question of why now is answered by pointing to years of methodical, behind-the-scenes preparation. This is not a sudden reaction but the culmination of a long-term strategy. According to the report, the Central Bank of Iraq has been diligently upgrading its core financial infrastructure for years. This preparatory work included integrating its systems with global payment networks, such as SWIFT, and progressively tightening regulations on foreign currency transactions. These reforms were not isolated fixes but deliberate steps to build the necessary foundation for the massive digital leap that is now being announced. Without this groundwork, a project of this scale would not be feasible. The financial conditions for this launch are also reported to be in place. Iraq's economy has achieved a greater degree of stability than in previous years, providing a more predictable environment for such a significant monetary transition. A critical factor cited is that the nation's foreign currency reserves are at record highs, with figures noted as exceeding $100 billion. This substantial financial cushion provides the central bank with the necessary backing and confidence to manage its currency. Combined with the technological readiness achieved through infrastructure upgrades, the CBI appears to have chosen this specific moment to act because the perceived risks are lower, and the capacity to manage a digital currency transparently is finally in place. It is crucial to make one point crystal clear. As the report emphasizes, physical, paper money is not disappearing overnight. The central bank's plan does not involve an immediate or forced switch-off of cash. Instead, both the traditional and the new digital systems will operate in parallel, side by side during a transitional period. Iraqi citizens will retain the ability to use their traditional cash for daily transactions as they always have. However, they will now be given the new option to convert that physical cash into digital dinar through authorized and regulated channels, such as commercial banks and designated mobile payment platforms. This dual system approach is intended to allow for a gradual and voluntary adoption. The long-term vision, as described in the analysis, is a gradual migration toward a cash-like society, which is to say, a society less reliant on physical cash. The central bank will maintain the secure, government-controlled ledger to track all digital balances and transactions. The success of this vision hinges on building public trust. As citizens begin to use the digital dinar and experience its convenience and security, the expectation is that adoption will grow organically. Over time, this will naturally lead Iraq toward a more cashless, or at least less cash, economy. The stated benefits are clear: faster payments, the eradication of counterfeit notes from the digital space, and a cleaner, traceable financial network. A powerful component of this announcement is the new system's link to the international financial world. The digital dinar framework is reportedly designed to connect directly with global payment systems, with giants like Visa and MasterCard being mentioned as examples. This international connectivity is what elevates the initiative from a domestic upgrade to a globally significant development. For many years, international companies and investors have hesitated to engage deeply with Iraq's economy, often citing the slow, complex, and paper-intensive nature of its financial transactions. The old system presented high friction and risk, acting as a major barrier to foreign investment and trade. This new digital system is designed to solve that problem directly. With a modern, digital payment rail, cross-border transactions can potentially move in seconds, not days or weeks. A European company, for instance, could pay an Iraqi supplier with digital efficiency. A foreign investor could move funds into the country for a project without the traditional worries about paper-based delays, corruption, or a lack of transparency. This newfound efficiency is the key to building international confidence. When confidence grows, investment is attracted. With this move, Iraq is signaling that it is not just trying to catch up with the global economy, but is actively positioning itself to compete within it. Naturally, whenever the Central Bank of Iraq makes a significant policy announcement, one question invariably arises. Could this initiative lead to a change in the dinar's exchange rate, or what some refer to as a revaluation? It is a fair question, but the report urges a clear and nuanced perspective. The analysis is firm that the launch of a digital dinar does not, in and of itself, instantly or automatically change the currency's external value. The exchange rate is determined by a host of macroeconomic factors, and a change in monetary format is not a direct trigger for a revaluation. However, the report does lay out a nuanced argument regarding the long-term implications. While the CBDC is not the trigger, it is described as laying the essential groundwork for potential future policy changes. The logic presented is that before any country can sustainably adjust or revalue its currency, it must first achieve several prerequisites. It must stabilize its domestic financial system, gain the ability to precisely manage inflation, and crucially, earn the trust of both its citizens and international investors. The digital framework, by providing total visibility and control over the money supply, is the very tool that helps the CBI achieve these exact conditions. Therefore, while the rollout does not signal an imminent change in value, it is positioned as a powerful strengthening of Iraq's long-term financial position and sovereignty. Think about the broader strategy. For years, the central bank has been working to rebuild its credibility. It has successfully increased its foreign reserves to over $100 billion, a massive financial buffer. It has actively cracked down on the illegal or improper use of foreign currency within its borders. It has also tightened regulations governing import and export transactions. The introduction of a digital currency is the next logical step, giving the CBI the ultimate tool, the ability to monitor every dinar in the digital system in real time. This represents an enormous upgrade in financial control once this level of control and stability becomes the established norm. The practical considerations for managing the exchange rate change. Adjusting the dinar's value or even considering a revaluation becomes a much more practical and sustainable policy option for the central bank to consider. It moves from being a speculative hope to a manageable policy tool. The path toward a stronger, more stable dinar, as the analysis suggests, begins with exactly these kinds of fundamental, structural reforms. The digital dinar is perhaps the most significant structural reform of all, providing the foundation upon which future policies can be built. For the average person, this change is being presented as a form of empowerment. The report provides several small but powerful examples of this. A taxi driver in Baghdad, for instance, would no longer need to carry large, unsafe stacks of cash. A teacher in Basra could receive her monthly salary instantly on her phone without delays. A student in Mosul could pay tuition digitally from home, bypassing the need to travel to a bank and wait in line. While these are everyday examples, they reflect a huge potential for social progress and economic efficiency, freeing up time and reducing risk for millions of citizens. Furthermore, the system is designed to promote financial inclusion, a critical goal for Iraq's development. There are large segments of the population, particularly in remote or rural areas, who have never had a formal bank account. They have been effectively locked out of the modern economy. The new system, as described, would allow these individuals to participate in the formal economy simply by using a mobile application. This opens up access to savings, credit, and secure payments for the unbanked. This is how nations grow stronger, by providing everyone with a fair and accessible way to participate in the economy. Of course, a transformation of this scale is never without significant challenges. The report is realistic about the hurdles ahead. A primary challenge is cultural. Many Iraqis, particularly in older generations, feel more comfortable with physical money. It is tangible. They can see it and hold it. Convincing this segment of the populace to trust a purely digital form of payment will require a massive and patient educational effort. The Central Bank of Iraq is reportedly aware of this and plans to roll out nationwide awareness programs to explain how the digital dinar works and how to use it safely. Cybersecurity is another top-tier priority. Moving a nation's financial system online means it must be protected from sophisticated digital attacks and fraud. Iraq must ensure its central ledger and the entire payment ecosystem are robust and secure. To this end, the central bank has reportedly been partnering with international experts to implement top-tier security protocols. Building public confidence in both the usability and the safety of the platform will be the two key pillars for ensuring successful adoption. Education and security will be paramount in the months and years ahead. One of the single biggest advantages highlighted in this new system is transparency. This is a recurring theme and a core objective of the entire project. In the new framework, every digital transaction is recorded. This creates an auditable trail that does not exist in the cash economy. The potential implications for combating corruption, one of Iraq's most persistent and damaging economic issues, are enormous. Government spending, tax collection, and the payment of public salaries will all become traceable on the central ledger. This kind of systemic, built-in accountability does more than just improve governance. It directly boosts investor confidence and enhances Iraq's international reputation. It is important to note that Iraq is not embarking on this journey in isolation. The report places this move within a broader global context. Nearly all major world economies are currently in the process of researching, developing, or even piloting their own central bank digital currencies. China's digital yuan is already in active use among its population. The European Central Bank is in an advanced testing phase for a potential digital euro. Even the United States Federal Reserve is actively studying the feasibility of a digital dollar. Iraq's decision to join this global movement is a clear signal that it is serious about modernization and integration with the emerging standards of the global financial system. The implementation of this project will not happen all at once. The report outlines a careful, phased rollout plan. The process is set to begin with pilot programs in key economic hubs, specifically naming cities like Baghdad, Basra, and Erbil. In these initial trials, a select group of participants, including specific banks, government departments, and payment providers, will begin testing the system with real-world transactions. This allows the central bank to monitor the platform's performance in a controlled environment, identify any potential issues, and gather critical feedback from an initial user base. Following the successful completion of these trials, the central bank will use the feedback and data collected to fine-tune the platform, ensuring it is secure, efficient, and user-friendly. Once the system is proven, a gradual nationwide expansion will begin. This expansion is expected to progressively cover the payment of public salaries, integration with retail businesses for everyday purchases, and eventually the facilitation of international trade. The analysis suggests a timeline where, within 1 or 2 years, Iraq could realistically become one of the first economies in the Middle East to operate primarily on a digital currency framework. Looking at the big picture, this initiative is described as more than just a change in banking technology. It is part of a transformation of Iraq's national economic identity. The country is sending a clear signal to the world that it is prepared to leave outdated, inefficient, and opaque systems behind. It is demonstrating a willingness to take decisive control of its own financial destiny. From the stabilization of the economy and the buildup of reserves to this new global connection, every major reform over the past few years appears to have been leading to this moment. The launch of the digital dinar is Iraq's declaration that it is no longer a follower in global finance, but an emerging player actively shaping its own future. As we conclude this report, the bottom line is that the digital dinar marks the beginning of a significant new chapter for Iraq. This chapter is intended to be built on the principles of transparency, security, and modernization. It is not just a tool for banks, but a foundational bridge to the future for millions of citizens. The central bank has made its move, and its message is one of control and confidence. Every major transformation begins with definitive steps. While the full impact will only be seen over time, this move represents a clear turning point the moment Iraq stepped forward to embrace a digital, controlled, and integrated financial future. Thank you for tuning in to the Dinar Daily.